Hello everyone, welcome to the Ichimoku.co chart of the day. NYMEX oil today, and here we see an extension of the trend to the downside, current candle forming a lower high and lower low. Another black body candle, so net momentum is still favouring the sellers, and the range of this candle is quite large, suggesting that sellers are quite eager at the moment. We still have the sellers in control. We've closed down below the midpoint level and the low, but importantly the market has found some support down below this 42.45 level. Unable to close down below there. There has been some upside rejection from there. It's not strong, but it may be significant, and it could be a sign that we could see this area continuing to hold as support 42.45. This will be an important benchmark moving forward for this market, and I suggest that a close down below there, certainly down through that low of today's trading, could see the market testing down to that round number $40, especially if we have a strong bearish close down below that 42.45 region. In terms of Ichimoku, a bear market in all three time frames. The market is trading below the cloud, the Kijun-sen, the Tenkan-sen, and if we look at the Chica span, it's down below the corresponding price action. So it is suggesting that we have strong downside momentum supporting this trend to the downside. Now, just using our Fibonacci extension tool, and here we're examining, sorry, just adjusting that for the current downtrend. We're examining the relationship of this current first time frame downtrend to that immediate previous first time frame downtrend. And here we see the market trading through that 100% level in a fairly bearish manner. And it does suggest that we could see a follow through to the downside. Now, our target here will be the 161.8% level at 41.25, and examining how the market behaves around this level if we do trade down to there. So we have a minor loss of commitment at the moment, but the sellers still are the stronger party, and what we'll be looking for if we do extend down to that 41.25 level will be a loss of the strength of the sellers and perhaps a return of the strength of the buyers, and it could signify a possible termination of that first time frame downtrend around that level. Now, this is all hypothetical, we're not trading near there, but this is if that trend does extend further to the downside, which there is a good possibility of happening. Now, using the Fibonacci retracement tool gives us a slightly different picture. And the Fibonacci retracement tool examines the relationship of the current first time frame downtrend to the immediate previous first time frame uptrend. Here we see the market interacting with the 261.8% level with some rejection from below there, and the market closing around that 261.8% level around 42.50. It does suggest that there is a possibility of a change of trend, although we're not seeing that a strong potential for that in the short-term dynamics where the sellers still are the stronger party. But still, it does suggest that there is a possibility. So just monitoring very carefully for some buying activity and a potential change of trend, although the buyers will need to be very strong to close up through the high of today's candle to establish that uptrend, which would be around the 44.20 level. This suggests that if we do see strong negative activity down through this 261.8% level and a close down through there, the extension through to the 423.6% level to around $40.79 may be the extent of this first time frame downtrend move. That would be quite an extreme move. Always when we get to the 423.6% levels, it's rather extreme. So the potential extent of this move could be around that $41 level roughly. And as with the Fibonacci extension tool, it's within the vicinity, 41.25, of the Fibonacci target. And this gives us an aid where we don't have any significant targets based on support and resistance between this 42.45 level and that round number $40. Now, looking at the bands here with NYMEX oil, and here we see very significant trading activity down below that lower band. It does suggest that we have a very strong bearish tone in this medium-term time frame by closing down below that lower band. The market finding resistance at the upper band for the last 3 consecutive days. from that lower band for the last 3 consecutive days, and the rejection from that level has been quite strong. Now we are looking a little overextended in the depth of the close away from the middle of the bands, and the bands are rather wide, so it is suggesting that this market is just starting to look a little overextended, and it wouldn't surprise to see a bounce back towards the bands. And if we do see a bounce, looking for resistance to first develop around the lower band, around that round number $44. And if we do see a close back within the bands, we could see an extension back through to the middle of the bands around the $46 level at the moment.